Good morning, everyone, and welcome back to this week's episode of the Broker Breakdown with myself and Mike. Mike, we were talking off the podcast there, and it looks like you had a very wet round of golf on Monday.
Yeah, it wasn't the best. Certainly rainy the entire time. It stopped basically as we finished up 18. So, yeah, it was not the most fun, but hey, it gets out.
We needed the rain, though. Even from last week when we were talking about forest fires and stuff, but even from like the golfing aspect, like I was starting to see courses like start to dry up a little bit. Even if you looked at like, I'm very like analytical and like to see things like this, but like even if you look at the ponds, like if you play the same course, like because we play the same course in Ancaster a lot during the week, but even like from the beginning of the season to like even like now, like it's only June 14th, and like the water levels have like decreased so much where there's like even like streams now are basically like completely dried out. So we definitely needed this rain the last few days that we've gotten it. So honestly, I'm not going to complain.
No, it's really, really good. Actually, last night did the fertilizing and little overseed and kind of get on the back lawn there, because typically by June I'm not hurting this bad, but it was dry, right? So hopefully get a little bit of more luscious back lawn is what I like to see.
You can start practicing the back lawn then.
No, I don't want to take out all the nice new grass, right? I've thought about that, but maybe get a net in the backyard.
Yeah, like a net and a mat. A lot of people do that. My buddy does that actually. He's got a big driving net, and he's got a chipping net, and then he's got like a little mat that he like practices on. So
yeah, it's good. It's good for hitting balls.
Yeah, exactly. Instead of having to like go out into the range and stuff, especially if you're not close to a range. And ranges cost so much money now. Like I know the one that we used to go to in Hamilton now, like it's like $30 a bucket. Like it's like
that's steep. That's steep.
Yeah, and like the facilities aren't even like that. Like they're nothing special.
I'm at. I just go to like local places around here where I'm at, and usually you're at like $12.
Yeah, there's one in Guelph that I go to that's like $15, and I get like 3 buckets, and it's like luscious grass you hit off of, like really nice chipping green, putting green, like sand traps, and it's worth the $15. Like, and I've spent like hours there before. Yeah. If I'm not going to play around that weekend, I'll just go there and kind of work on some stuff. So
beauty, yeah, that's lovely actually.
But this week, kind of changing lanes a little bit from the last few weeks that we've talked about some things. But this week, we're actually going to jump into renewal times. So basically, what a renewal really looks like behind the scenes. Because again, a lot of people just either get their documents in the mail or they get an email and here's your renewal. But like, what actually goes on behind the scenes to get that renewal, and what I would say, me and Mike talked about this, what proactive brokers do. Because again, I'm not saying all brokers, but I would say a lot of brokers will just get the renewal, send it off to their client, and that's really about it. But realistically, what me and Mike and a few other brokers that we know, what we kind of do to be proactive and make sure things are reviewed prior. And again, we were talking about this beforehand too, but everything can't be reviewed prior to a renewal. Like there are things that we just don't see. And Mike, we were talking about this, like licensing, if you've gotten a new license or if you moved, like we can never know that, right? So basically we want to break this episode down, one from the renewal side of on us, like what we do on our end as the broker, but also what consumers can do on their end when they're reviewing their policies and making sure everything is up to date and accurate as possible.
Yeah, and there's a lot that goes into a renewal. So I guess what I'll say is there's to start and kind of take a quick step back. There's two types of there's two people involved in that transaction, James, right? You have the client on the one side that has their policy that renews annually, because most insurance policies do. And then you have the brokerage side, which is what we do and who we work for, that is in charge of, receiving that renewal from the insurance company. And then at that point, and every brokerage and every model is different. So I only say this because it's more of a general statement. But you can either let it kind of renew as is, send it out to the client, and then if they have any questions or concerns, kind of be there as that sounding board and that middleman to help. Or you can say, hey guys, it's coming up. You'll be getting the paperwork in the mail there in the next couple of days or next couple of weeks. Let's discuss this when you have a chance to kind of digest the renewal and take a look at it. So I know, James, I've spoken to lots of people in the past, and this is not a dig at either side, but I talk to clients all the time that their policies renew annually. And unless there's a concern, it's kind of that complacency side, right? It's let the policy renew. If there's a question or concern, I'll give my representative a call. But if all seems to be good and the price is reasonable in the client's eyes, I'll just let it renew, right? Like I think there's been a lot of that historically in our business.
Oh, 100%, right? Like even for us, like if I see a renewal and we've reviewed the renewal and the rate's gone down, like I'm basically just sending the renewal out and like having the client basically review it at that point, where it's not like we're going to a huge amount of depth here to review and make sure everything's done and nothing's really changed. But on the flip side of things, like if I see a policy and I'm like, oh, well, that's jumped up a little bit, like I always like to reach out to the client and say, you know what, here's some transparency. It's gone up this amount. Is there anything we need to change? Like I said, is there licensing that might have updated from a G2 to a G? Did you move recently? Like, is this still accurate? Are there discounts that we could have qualified for, we didn't qualify for last year? Or are there new things that now that are come out? Because again, companies are always revamping their coverages and policies and stuff. So there could be new coverages that could come out, or you could qualify for this year, you didn't qualify for last year. But again, it's always important to make sure that everything is as accurate as possible, because like I said, in the event of a claim, you want to make sure you're representing yourself as accurately as possible. Now, again, like there are obviously things that are minorly missed. Like we're not perfect. Humans are not perfect, right? So even for renewals, like there could be things that we overlook, but that's why we always send it out to the consumer. And I always say to people, like, look, like make sure that you're reviewing it as well, because again, how many do we review on a daily basis, or how many clients do we get renew on a daily basis, Mike? And again, like if we're not perfect, we can miss minor things. So that's why it's always nice for the consumer to also take a look and say, hey, like, you know what? I have winter tires. It doesn't show winter tires. Can we add that on? Yeah, no problem. Here's what the new rate's going to look like.
Right. Well, and there's a side piece, and I was speaking with someone yesterday in a referral network that I'm a part of, and I was looking at their own home and auto renewals that came in. And the one thing that I noticed right away after, spending just 5 minutes taking a look at their home side was that the replacement cost of the structure for their home was significantly more than what I felt it needed to be at. So obviously did a quick review, when was it built, all the updates, James, all the stuff we typically look at with respect to the replacement cost of a home, size, square footage, bathrooms, etc. And it was crazy. The home was insured for about $820,000. But for reference, doing the evaluation that I did amongst the many companies and the way that we typically do it, the home was only sitting at about just over $600,000. So it was actually $200,000 over insured. Now, some people might say, well, I have more coverage in case I need it. But the reality is, if you're over insuring your house, basically just meaning it's the cost to rebuild. So if you're over insuring that value, you've actually been paying more every year for that policy, for the promise that if there's a fire loss, they're going to rebuild. And in kind of looking through this renewal process, James, I chatted with her. We went over why my recommendation is to lower it a little bit based on current rebuilding cost trends and just the fact that it's overinflated. But what we found out through this experience was that her policy has been with the same brokerage for the past 20 years with the same insurance company as well. So it's just inflated that 3, 4, 5% every year. and nobody at the office looked at it to ever say, hey, let's do an eval to check to see where it's at. It's literally just renewed for the last, I think she said 15 to 20 years continuously. So we went through a big conversation, but I was like, holy smokes, man, if me and you didn't do this, and more importantly, I didn't take a look at these documents for you, we would have no idea why the pricing is so far off.
Yeah, and every company is going to have a different way of evaluating, obviously, the rebuild. Like, it's not going to be the same across the board. Like, for us and the companies that we use, because we use a certain system, but like direct writers are going to have a different way of doing that as well. But, and to your point, it is true, because on renewal, it's not like we do evaluations every single year. Basically, what they'll do is they'll tack on like a 2 or 3% increase on that rebuild year over year, so that it's increasing a little bit, right? But it is like I said, and you just said there too, it's important to make sure, especially if you've been with the same company for 20, 25 years, you want to make sure the evaluation is done probably, I would say, at least twice or maybe even 3 times in that time, because again, like those minor 2 or 3% increases, I'm actually almost shocked that the home wasn't underinsured, to be honest with you, because a 2 or 3% increase over that time, especially what we've seen with the pandemic and everything, with rates skyrocketing on rebuild costs and just building homes in general, I would have thought that that home would have been almost underinsured, Mike.
Well, like most home providers, it's usually upwards of about 5%. So the problem is that as the home continues to gain value, that 5%, if you think about it, actually adds even more coverage, right? So the home at $200,000, 5% is what? Only 10 grand, not the end of the world. But you go up to something like, the 6, 7, 800,000 range, that 5% is now, it could be 40, 50 grand, right? So over 10, 15, 20 years, that number can overly inflate to well beyond what the actual cost of rebuilding is. So I've seen it a lot. I would recommend to people, and I've done this at for the last 10 years or so, kind of touching base on that, but between the 4 to 5 year mark. I think 5 years at the max, just to ensure that it's within range. You don't want to over or underpay, absolutely not, but you do want to make sure that if there's a claim, the insurance company is going to provide the proper amount required to help repair or replace your home, James. That's, I would say, if it's around 4 or 5%, you got to be looking at that every 4 or 5 years, and that's just something that the broker side can do if you're using a proactive approach.
So staying on that proactive approach, Mike, from a proactive broker, when should consumers expect to see a renewal? And again, I would also counter this at saying, yes, the broker is obviously responsible for sending out that renewal, but sometimes it's also the company that they're using too could be behind and stuff, because we're even seeing right now,
right,
there's certain companies, I just found out about this like literally earlier this week. There's some companies right now that are still processing documents from April.
Yeah, I mean, it's tough. I think the insurance industry, not us, but the insurance company side, has been fighting that staffing problem, as we've been saying during COVID. And I mean, it's easy for us to sit here and say the easy fix is to hire on more people, but they got their own challenges to deal with. Personal lines insurance, so your standard home and auto stuff, James, it's got to be between about 30 to 60 days is the norm. That's what people should expect. If you're getting renewal, your home insurance renewal 1 to 2 weeks before, man, there's something going on behind the scenes. That should certainly not be the case. One, you don't have enough time now for the average person to even look around, because the average person is so busy in life. But for two, at that point, you've already seen probably a new payment come out, and then people get complacent and just say, oh, it is what it is. I'll take a look at things next year.
Yeah, exactly.
But and 30 to 60 days there to answer your question, I think is probably fair.
And even from the broker side, like giving your client a week or two to look is tough, because then if they want to reshop that, it's like, well, now I have a week or two and I have to add that into my schedule to do. When again, like if you gave it that, like I would say 60 days is a little bit far, because I don't think a lot of companies do the 60-day mark anymore. I think most companies now are about 30 to 45 days, so that month to a month and a half. I think that's a pretty fair kind of timeline to give that to your client to review the options. And if they want to shop it, we shop it. And like I said, then there's a lot of time to basically make a decision in that 30 to 45 day mark personally.
Yeah, sorry, there was difference there. I meant like when usually the company will send it out. It doesn't necessarily mean that we'll, the shop results, you're probably going to be in a spot where I think 30 days is fair because companies don't always reserve or kind of promise rates that far in advance. So if you're doing a complete shop amongst other insurance companies, it's very possible you won't get accurate rates 60 days out, right?
So that's another great point that I would love to bring up as well, is that, yes, we obviously want to give as much time to basically shop policies and have renewals and stuff. But that was a great point that you just made, Mike, is that rates could change anywhere from a 30 to 60 day mark. So to do a quote way past that 60 day mark is actually almost like not accurate, because then you're going to have to go back and re-quote it anyways, because the rate could possibly change. Now, rates did change a lot like March and April. We haven't really seen rates change all that much, if at all, in May and June. And haven't heard anything as of yet for July. But yeah, that was definitely the case back in April and March, because we were seeing a lot of companies take rate during that time.
Yeah, and there was a lot of newsletters back then about increases happening, what to kind of expect from our side, and then how that's going to affect the clients. But that's kind of simmered down a little bit. I think they've kind of, gotten their rates locked in where there are increases with FSRA, and then it's like, okay, this is what's happening down the pipeline here for the next few quarters.
Yeah, I could see, again, this is a little bit off topic, but I do probably predict some companies will probably take a rate again in the fall time, just from what I'm kind of seeing. But I think summertime, and like I said, don't quote me on this, it's just kind of what I'm predicting, is I think summer is going to be pretty stable. And I think fall time, you'll see not all companies will probably take a little bit of a rate again come fall.
Yeah, a lot of stuff going on with that. Again, something we don't really know too much of that. Those are just random predictions.
But again, to go back to the renewal side of things, once your policy renews, and this might just be very basic information, but I would like to kind of obviously share this for people. Once your policy renews, even if companies take rate increases, your policy doesn't renew or doesn't take that rate increase midterm. What will happen is upon renewal, that's when you'll see the rate difference, if there even is one. So keep that in mind. Just because a company, let's say you renewed in January, then the company A took a rate increase in March, your rate's not going to go up in March because they took that rate increase. You will probably see that rate increase next renewal, if at all, because again, in that year span, they might raise their rates in March, but their rates could stabilize come the fall time, and then realistically it might not even impact you come renewal next year. So just a little piece of information for people that think that if rates increase at all throughout the year, so does your policy. It doesn't, because it's locked in for that year. Again, changes obviously could change that rate. If you get a new car, if you move, new license, new driver, all that kind of stuff. But if you literally don't touch that policy the whole year, your rate is not changing until the renewal time.
There's another thing too to point out, because I know this is more of a kind of a frequently asked question for either people that I'm looking at for a new business or whatever the circumstances might be. When your policy has kind of gone past that renewal, so typically people will receive their documents, James, like we said, 30, 45, 60 days, whatever it is in advance. And I've talked to a few people that have said, oh, Mike, I've gotten the renewal in. Does that mean I'm now locked into this next year? So I wanted to kind of squash that just so everyone's aware. When you receive paperwork saying this is what your new price is going to be for the next term, it's just them giving you a heads up of what to expect, whether it's a reduction or an increase or whatever the case may be this is what you're going to expect for that following term. But as long as you, if you are making a switch and you cancel that policy prior to or on that renewal date, you're typically not going to see any cancellation fees. If it's not the very end of the term, you might see some. But the thing I wanted to highlight is that if it goes into the following year, So, you're a week, 2 week, 3 weeks, a month in. Most insurance companies do have a kind of short rate cancellation fee, as it's called in the business, which just means you've already renewed for the next year. You're now being penalized based on the unused insurance for that term. So people should be aware, if you're going to make changes, you got to do it on or before your date. That's the big tidbit.
And one thing I would like to add into that, because this has actually been a big talking point for some of my clients recently too, is that a lot of people have been really focused on this. Oh, I have to cancel 30 days beforehand. And I've been telling people, well, no, you don't. You could literally cancel the day of your renewal. It's just you need to have something in place, because legally, when you go and cancel and they go, well, your renewal is today or was yesterday, if you have something already in place that's dated with that same date, legally they have to go back and they have to basically backdate it to that time, because you can't insure a vehicle or a home at two different insurance companies. Just, you can't do that. So to squash the 30-day mark or the 15-day mark or whatever it might be to cancel, literally you can cancel and not renew day of if you wanted to. It's just, like I said, personally, I always like to give clients more time to do that, because then again, you can look around, we can shop the policy. The good thing about being a broker, Mike, is that, again, we have so many companies that we work with. So, again, if company A kind of gets cold all of a sudden, we can always move to company B, C, D, E, F, G, right? So it's never, you're not stuck with one company forever. We can kind of move people around as the market kind of changes and stabilizes a little bit more throughout the next few months and maybe even year.
And I love that portion, because there's clients that might be more of the higher risk ones that have had, claims or tickets or anything else. And going back to the benefit of being the broker is that we can kind of create that rehab plan to say, hey, you got things falling off your record around this time. I'll take a look at it at that point and say, what else can we do to lower that on the renewal date, right? So if you work for, let's say, one insurance company, you don't really have that benefit. Either it qualifies or it doesn't, and this is the rate or this isn't. It's kind of a mold that has to fit. Whereas on that brokerage side, if me and you say, hey, this isn't going to work this year, let's look at an alternative company. That's part of our benefit about what we do.
So looking from the consumer side of things, Mike, I know we kind of touched base on it earlier in the episode here, but when you get the renewal, like a lot of people, like you hear this all the time, oh, I got my renewal and I just threw it out. But should you really, like, I'm not saying you need to like sit down and read all 50 pages of it, but like, should you be going through like the important stuff, like address, the vehicles that are on file, the coverages, that kind of stuff? I'm not asking for an in-depth consumer review as well, because obviously consumers looking at this stuff is, a lot of it's not English to them. So, but like throwing it out is just not, you just should never be throwing out your insurance renewal ever.
No, I mean, I would never say that anyways. Yeah, right. I mean, sure, you could file it away, which is probably what 8 out of 10 people do. But the first few pages are typically going to have, or are the most important pages. They're the ones that show you all of the details of your policy and really what's being insured, to be honest. And then there's also going to be, especially in auto packages, you're going to have new, fresh liability slips for the next year. Some of which are at the front, some of which are right in the back of the packages. So to throw it out or shred it right away, you're just putting yourself in the position to hopefully not get pulled over for a no insurance card ticket, which unfortunately happens all the time. So yeah, keep that package, file it away, but James, certainly don't throw it out.
So two things I do also want to bring up as well that kind of changed in our industry in the last few years is that as of September 2020, you can now keep your liability slips virtually or like electronically. So like on your phone, you can keep them, which is good because then you don't have to keep them physically. And I know a lot of people are going that digital route. And on top of that digital route, a lot of companies now are trying to go paperless. So they'll send renewals now, not by the mail, they'll send them by email. Now, most companies, if you note on the file or like you say to them, hey, you know what, this person doesn't have access to an email or would still like them mailed, they still will mail them out. But I know a lot of companies are trying to go this paperless route. So please make sure, another question you should probably follow up with your broker is if you want paper, please let your broker know so that they can note on the file that this, like, you want paper still, and you'll get it electronically still, but you also get it in the mail because, like I said, a lot of companies are trying to go and cut down their paper usage. So they're trying to just send everything via email now.
Yeah. And that's a big thing for, obviously the aging population that's been a fan of getting that stuff in the mail ahead of time, hard copy, right? It's the way they did business for, their entire life. And we've seen more and more companies shy away from that. So it's definitely something to ask about if you need that. If not, it's probably going to be emailed from more half the companies out now.
Yeah. Even like my grandparents, for example, they're not that old. Like my grandma's 66 and my grandfather is 72 or 73 this year. Different sides of the family. But again, like, she doesn't really have an email. She's never really had internet until like literally this year. She only had a phone like 3 years ago. So she likes to get everything like sent via mail. And my grandfather, again, coming from another country and not really using computers and stuff, again, just easier for them to see actual paper. And again, well, my grandmother's always been in Canada, but my grandfather's been in Canada for the last 50 years since he was about 18 or 20. And they just always dealt with the paper. Like, it came in the mail, they looked at it, they could actually see physical copies. Like, that's how they want to still have it, right? So for consumers like that, it's literally just an easy thing of just saying, hey, you know what? This client still wants paper. Can you mail them out paper?
Yeah, exactly. I would recommend, and this is something I kind of always mention on that renewal time, because only it's just top of mind, James, that even like new clients that are looking to say, hey, I want someone to review this for me, but I don't want to have to proceed. I mean, I welcome that kind of stuff with open arms. I think there sometimes is like a misconception just in sales in general, that if you reach out to someone, they're doing work for you, people feel the obligation or necessity to proceed. And that's sometimes the hurdle as to like why they don't reach out in the first place. Whereas I love being able to chat with literally anybody about their insurance. Whether or not I can earn their business is a different topic. But when that annual renewal comes up, saying, let's take a look at your paperwork plus a few other details and see if it's legitimate and good. And if so, I'll leave you on your way. But maybe there's savings, or maybe there's coverage recommendations. I mean, things are changing in the landscape with inflation and rentals and vehicle prices and all this stuff. Your policy really can't stay the same way that it has been for the last 20 years. That would be a big point I'd want to make, is that someone needs to look at it. You got to trust someone, have them in your corner.
Yeah, and that's a big point. What I would almost counter to that saying is that, you know what, calling or emailing your broker and saying, you know what, do you have like 2 minutes, 5 minutes of your time to review this with me just so we can kind of clarify things? That is not a silly question to ask, because again, if you're unsure about something or you want to make sure that something is actually on the renewal, again, like we do it all the time here. Like if I get people all the time, you know what, my renewal came in, do you have like 5 minutes for me to review it? Yes, like of course I do. Like let's schedule a time, let's review it, let's like ask the questions you have, and like I said, let's clarify things you might have question marks on, right? I would rather take that 5 minutes out of my day and make sure that you're comfortable and aware of what's actually on there and what has actually happened. Because again, we're going through, and we've said this numerous times throughout the last few months, we are going through this very unstable time in this industry. Insurance is very unstable right now. Rates are increasing. Companies are making more strict rules, all this kind of stuff. Rates are going up. And people want to know what is actually going on. And they don't want this just not. And I find a lot of brokers just give the nonsense of, oh, well, everything else in life is going up. Insurance is going up too. Well, break that down more in depth for people, right? Like I'm sitting here and you got to think, okay, repair costs have gone up. Okay, perfect. So that means claims are going to cost more for insurance companies. So what's that going to do? Rates are going to go up. Cars have gone up. Okay, so what's that going to mean? Okay, well, values of vehicles have now gone up. Okay, so now we have to insure cars for more than what they were prior. What's that going to do to rates? They're going to go up. Home values have gone up. Okay, so what's that going to do to the rebuild cost of homes. Well, that's going to go up. Okay, so now prices of homes insurance is going to go up, right? Theft. We've talked about theft 1,000 times on this podcast. Theft is at an all-time high in Ontario and across Canada. It's a $1.2 billion in claims last year alone. Okay, so theft has gone up. Insurance rates are going to go up because now we're paying more for claims than we've ever paid for before. Traffic levels during COVID significantly decreased, so you saw less claims during that time. Well, now traffic is basically back to normal. So it's just a numbers game at that point. If traffic numbers have gone up, what do you think claim numbers are going to go up? They're going to go up as well. So more claims means rates are probably going to go up because now we're paying out more claims. And again, we did a claim, and we did some claim numbers, but alone, even just on the auto side of things, 55% of auto premium goes directly back into claims, and 34% of it on the home side go right back into claims. So if all these things are increasing, and I haven't even touched base yet on wages, you got to think mechanics, and we've talked about this before too, mechanics are so hard to find right now. So to get a mechanic to move shops, you got to pay them more. Well, if you're going to pay them more, your service fees are going to have to go up. So when you come into and get servicing, not even from a claim standpoint, from a straight oil change, that's going to increase rates too. So there's just so many different in-depth factors to why rates are going up instead of just telling your consumer, well, everything else in life is going up. Inflation's increasing everything, so is your insurance. That's just a very lazy way of getting out of why your rate might be going up.
Yeah, and on the renewal, I think the one thing that I tried to point out, or at least maybe give a better perspective on it, is that if overall rates and prices change annually, or have the possibility to, and you've seen an increase, but there is maybe a valid reason for it, switching the company to go to a different provider that year just to get, those few dollars off, I'm not saying is the wrong answer by any means, because everyone has their own value points, whether it's price or coverage or service, whatever it might be. But I guess what I would say is that there's no promise that new insurance company you've moved to is not going to have a similar increase the following year, right? So you save with one company by moving, saying, okay, I've saved some, I had an increase, I wasn't okay with it. But then that new company you've moved with has had an increase the next year, James, as well. And I was like, oh, I got to move again. I keep having this. When in reality, it's possible that company, that the first original company you're with, sure, they might have seen 5 or 7%, like a lot are seeing right now, and it made sense to move in your eyes. But if we can provide a little more light to say, hey, I agree, we're not really happy with this. However, let's wait another year and see if next year, it's gone up again and there's not really an extra reason for it and you're not okay. At that point, we can take a better approach saying, okay, let's shop it and see. And there's two major reasons why I'm saying this. One of which is behind the scenes, having a different provider each and every year does look bad on a track record. There's no way to say it easily. But two, that other insurance company that you moved from may have actually had a reduction premium the following year that now you weren't able to see because you left them. So I think it's just about transparency, James, right? What's most important and what can we do to make it so that maybe this company does make sense for a couple of years before you exhaust that option? But exhausting those options is much better than just moving it each and every year. I think anybody in our business would have to or tend to agree with that.
Yeah, it's like hitting the panic button way too quick, right? It's like, oh, one little thing is increased. And you know what I find the biggest one is that people don't really realize is, like we talked about earlier on, is the rebuild costs, how the companies will increase it like 2, 3, 5% every year. Well, if they're going to increase the rebuild cost, your rate's going to go up a little bit. But usually when they increase the rebuild cost, that means your dwelling amount is going up And that probably means your water coverage is also going up, because especially if you have maximum coverage on the water side, if your rebuild goes from 600 to 650, your water is going to go from 600 to 650 if you're being given the maximum water coverage you can by a company. So those little small increases, you're going to see that, right? But again, personally, to me, to hit the panic button on something like that I don't think is warranted. And to your point, like, yes, it is. If we see it year over year over year, okay, let's probably move this away. But if you're seeing like a small, like $20-$30 every single year, well, it's because the rebuild's being increased every year, because that's what's happening in the market right now. But again, back to my point, I don't think that's warranted to hit a panic button that quickly. If we see a massive increase, okay, panic button hit, we're doing something about this. But these small little things that can be obviously like explained and explained well, the panic button should never even come into question of we need to move this.
No, and you're going to get, situations where, depending on the value, maybe that person is only price driven, and maybe there's other things that can be done to help lower that price, maybe maintain them with the same company to establish that relationship and get a better idea. But this also goes back to the transparency side when writing a new client from the beginning, right? Because somebody that's just always focused on just price may or may not see the value of what's being offered. And then it's like, okay, is this the right person for that book? And I get it. Everyone's, inflation's affecting everybody. But having, an entire book of business, for example, that is moving or shopping insurance each and every single year to find a couple of dollars in savings is not profitable to us or the brokerage on the grand scale, but also it just doesn't let that track record look good for yourself moving forward as well. So as much as the few dollars make sense, I can tell you that insurance companies will certainly behind the scenes look at, having 8 companies in 10 years and start asking questions, right? It just shows that there's no loyalty on that front.
Yeah. And again, like, I'm not going to ever judge anyone for it. But again, I always say to people, you know what, like I'm probably not the broker for you, because I'm here to make relationships and build a relationship with you over the long term. I don't want you for a year or 2 years and then you go, oh, you know what, it's just based off price. And I get everyone is very strapped on price right now because of what's going on in society. But like I said, I'm here to build relationships. I want to make sure if you need me for anything, I'm there. You can call me, you can email me, you can text me after hours. Like, people ask me all the time, oh, when do you guys close? Well, technically we close at 5, but like, I don't really close. Like, if I need to get stuff done, it gets done. So that's where I'm going to come into the conversation and go, you know what? Yeah, Joe Blow Insurance down the road, they close at 5. You can't reach them on the weekends. You can call, text, and email me. I might not be able to do it for you right away, but I can get it to that right person right away so that they know that it's urgent and needs to get done, instead of having to wait the extra day or over the weekend to get something done. And you don't even get a response until like the Monday or Tuesday.
Right. Yeah, that's a big thing. And that's one of the reasons we wanted to highlight this episode specifically, is that depending on who you're with, each brokerage is going to have a different approach as to kind of what that renewal process looks like, what we're doing for you. Is nothing happening, or is stuff getting done? And going back to trusting the right person. If you have that claim, who you're calling, right? Is it a call center, or is it that person that you've been speaking to the last 4 or 5 years? And I think my last point that I wanted to end at, James, for myself, was that historically speaking, that model really, really, really did well for insurance for the last 50 years. And then the last maybe 10, I noticed that there was a lot of the online, a lot of the call center environments, a lot of these bigger operations where once you become a client of an office, it goes into a queue kind of system for changes, and the client loses that relationship with someone that's helped them. And I think over the last decade, because I've now been in insurance for 10 years, actually this June, people are starting to kind of come back to saying, okay, that was fast and efficient, that model, but I do want to go back to having someone that I trust that's in my corner and that I can text or call specifically and then at least know what's going on. Because trying to add a vehicle on a Friday with one of the big guys that says, hey, we've all heard the message, right? Due to unforeseen circumstances, we don't have the right people, blah, blah, blah. You're going to have longer than normal wait times. And next thing you're trying to add a vehicle on, it takes 3 hours on a phone call. And I've heard those horror stories. So I guess what I wanted to end off with was having that personal connection and knowing somebody now, I think is starting to come back into different industries, insurance obviously being one of them, and saying, this is my person I deal with insurance for my home, auto, life, commercial, whatever it might be. People are starting to see value in that again.
Yeah, before I make my closing kind of point, I think that is very true. I do talk to a lot of clients, and I think one of their biggest pain points, other than price, is I just can't get a hold of my representative. And 9 times out of 10, when people say that, I have their policy on our books in the next week because, again, communication is so important to people right now. And again, in the world that we live in where we have phones, our emails go to our phones. And I get you have to unplug and you have to have your own personal time in your life behind it. But at the same time, as you have to get stuff done for your clients. And a lot of clients have come to me and said, you know what? I've tried to add this new car onto my policy for the last 2 weeks. I can't get a hold of my person. I'm sick and tired of it. I'm moving to you. No questions asked. I'll even pay more to come to you because I know I'm going to get a great service from you. And whenever I need something done, it gets done.
That's right. I mean, people want things that are fast, efficient, and done correctly. Knowing someone in that business is the same to me as knowing somebody in any other business that's been doing it for a while. You want to trust that it gets done right. You want to trust that the recommendations are happening from the right way. Calling in to get the new green broker that started last month, you're certainly able to, but I now see a lot more value in that after doing this as long as I have been. So everyone's got different ways to view it, but I think people are starting to see that, knowing that person, James, and trusting someone is a little more effective than maybe just that efficient online quote that seems too good to be true.
My closing point I did want to make is that I want people to really hone in on this because the media can really spew things the wrong way. And every time I look on the media and online, and it's like, oh, auto insurance premiums have jumped up as much as 37%. But what I really want to hit home here is that it's 37% on average. It's not 37% across Ontario. So people that live in the more bigger areas like Toronto, Mississauga, Etobicoke, yes, you might see rate that high. But someone that lives in Bracebridge, Gravenhurst, Kingston, you're not seeing a 37% increase. This is an on average increase that people are seeing. And even when companies say, well, we're raising our rates 5%, it's 5% on average. So someone in Kingston might not even see it. They might even see a decrease. Someone in Toronto, they might even see the 5%. They might see a 2% increase. So when we're talking increases here, we're talking from an average standpoint across the province. It's not everyone's getting this 30% increase. Not everyone's getting a 5% increase. It is an average based across the whole province. So that's a big key point I wanted to end this off with because, like I said, I see this way too much that the media spews it this way. And then I get people that call in. They're like, oh, I saw on CBC or I saw on the Toronto Star that they're increasing rates 30%. Yes, well, it's 30% on average. They don't put that in there because then it's not a big talking point if you just put 30%. You got to think they're in the business to obviously make headlines. They're not in the business to sugarcoat. They're going to sugarcoat stuff as much as possible because they want people to read obviously their news articles. But like I said, what I would say is if you're unsure, again, just ask your broker because again, I always say to people when they have this question, it's an average. It's not across the whole province. And again, I've seen sometimes where companies have said they're going to take a 10% increase, and I get clients that are in more rural parts and they take a decrease of 2%. So it's not for every client, it's an average across the province.
Yeah, that's a fair point to make. And yeah, we've seen a lot of that. So it's good just to know generalizations too, right? Because it's super easy to take. I remember years ago there was that comment, right? The liberals are going to reduce our insurance 15%, whatever it was, and I remember getting tons of phone calls back in that time. So
even that is on average. Like, it's not 15% for everyone. It's on average they're going to decrease them.
Well,
but that's what they don't say that, right? Because then it doesn't hit the headlines as much if you say, on average it's going to go down 15%. Not everyone's going down 15%.
That's politics anyways. That's just the game of politics.
What's your final takeaway from this episode, Mike?
I would say, if your paperwork comes in, that should be a trigger to either A, do your own due diligence and shop around, or B, just at least spend the 5 or 10 minutes, get in contact with your rep, find out if there's nothing else needed for the next year, and if there is, move on. If it's all good, or if there's questions or concerns, that should be your point. Don't just file it away each and every year, because I guess my final point would be not everyone reviews that on your behalf, and certainly is not shopped every year.
Yeah, I would say basically along the same lines. Like, don't just throw it out in the garbage. Like, actually take 2 seconds of your day, review it, make sure it's accurate even from your point. Because again, there are things, like I said, licensing we don't see every year because we don't run your reports. If you've moved, you have to let us know you've moved, because we're not psychics. We don't know that. But don't just throw it out. And again, if you're unsure, don't be shy. Ask your broker, schedule a time with them, sit down 2-5 minutes, whatever it might be, and just review it. Because again, reviewing it beforehand is way better than trying to review it after, when something's possibly happened and you go, oh, well, I thought I was covered for that. Well, no, you weren't. And then, like I said, then it comes into a he said, she said. Let's just try to avoid those situations at all possible. And like I said, just review it. Don't just throw it out, because throwing it out is just a waste of time for everyone. Yeah,
totally. You guys know we're on social. You can find us on, I think, almost all streaming platforms, James, or most of them.
Yeah, basically all of them now. So,
but yeah, we really appreciate everyone obviously listening in each and every week. This was a little bit more of that insurance topic instead of being just kind of general stuff going on. But we do appreciate all the listeners, and we will. I think this goes live next Tuesday.
Yeah, so this will go live the 20th of June, as it always does, because we record a week behind. And make sure you guys tune in every Tuesday, 12 p.m. Eastern Standard Time. Follow, subscribe, so you guys are never missing an episode, and it pops up for you guys every week. And we'll check you guys next week on the Broker Breakdown.